What's up, guys? Ego Complex Crypto Cauldron. I wanted to do an addendum to my 200 MA video I released earlier. I want to give you my full market prediction of when Bitcoin will go back into a reversal and go to the downside. Currently, we are in an uptrend. In our bearish market, we are in a bullish trend, and I do believe the reversal is imminent, and I want to share with you the data that proves that in my view. But first, you're looking at my screen and you're thinking, what am I looking at? Well, this bullseye looking indicator is a fib resistance arc. It's available in your drawing tools. Off to the right is a VPVR, volume profile indicator. This is free in TradingView. You don't have to be a premium member. You can change the candle colors if you wish. I match it to my candles. The third thing I added to paint this picture for you is the 233 EMA. Okay, this is a blue line here. The 233 EMA is an EMA. It's a Fibonacci number, whereas the SMA, the simple moving average, is just a 200. So I think these three indicators will fully give you the bird's eye view and drill down into the narrow view of what actually happened here and explain the post-mortem of how this top fell apart, because this has been bothering me. This double top, which is a really sloppy double top, fell 12,500 points. And I wanted a better explanation than I was getting from my normal indicators that I used. So this is what you do in TA. You experiment and you find some components to the story that start to make sense. And this is what I came up with. Let me share it with you. I'll walk you through this like a director. We have our Bitcoin down here, crossing that 35 mark there, by the way, and then moving up through the EMAs. Look at the volume spikes. You get this volume spike right here, just in line, the crush through the EMA, right? Good volume, good volume. You get up here. Look how the volume is stepping down. You see it stepping down? Look at the volume for the support level for the top compared to where you were down here. Now, that's one part of the picture. The other part of the picture is you crossed the 200 moving average, right? This was a dogfight here. These are 4-hour candles. You had 1, 2, 3, 4. Okay, so 16 hours you fought to get across this moving average. You finally get above it, and you hit the only place I could find since May 12th in descending triangle where the 233 was impacting the price is right here. You cross the 200 only to hit on the dollar, the 233 EMA. Reject it, black candle. Consolidation, you try one more time. This candle was white. Knife through the 233, hard rejection, turns into a black doji. Consolidation, boom, downtrend starts. Okay, once you start losing this downtrend here, you get a little, the EMAs try to save you. They say, hey, we'll lift you back up. You just roll again. Volume is too low at that range. See, you roll. You fall through the EMA, and now you're below the 200, and you never get it back. And then the descent. You went down another 10,000 points from here. Okay, so you went to the high 20s from here, and it all started up here, sandwiched between these two moving averages, the SMA and the EMA. Sandwiched between those two, the third component being the low volume. So let's bring this to current trend, okay? Current trend right now. Again, using the fib resistance arcs, you can see how accurate they are as far as pinpointing resistance levels. And here we are. So this candle was white when I started recording this. It dropped down black. It's resting on the 200 like I predicted in my last video it could do. The reason being, look at the volume for this climb. Here, I'll move this over so the candles come out a little bit more. Look at the volume for this climb. This green line right here is indicative of peak volume. Okay, so that's a lot of buying and selling. You can see the size of the candle. It's almost half white, half black. And as you come up through here, you have volume supporting this move, right? Look what happens as you get above this last resistance line into the 1.618 golden ratio. Look at the volume drop off, okay? You just passed the 200. You have a volume that hover, but you still had to fall back down to support, okay? You couldn't stay up here. You had to fall back down to support. What's going to happen here, I'm going to tell you exactly what's going to happen step by step. What's going to happen here is the EMAs are going to come up. You're going to get a little bit of a lift because you have the volume to support it. You're going to hit the 233 EMA, okay? The 233 EMA is going to impact you, and this is descending, so it's going to be somewhere in here, okay? Between the time it takes for these 4 hour, on the 4 hour chart for the EMAs to lift you up, it's going to be somewhere in here. You're going to be hitting that, so you're going to be sandwiched once again between a 200 and a 233 EMA. You're going to be combating declining volume. Look at that declination in volume, which leads me to my prediction of where Bitcoin's going to die and fall down. It's going to be in this death zone. This is the Bitcoin death zone, okay? Bitcoin will not fare well in this zone. Between the moving average sandwich that is going to be putting itself into, the declining volume, that is a steep decline. Look at the volume that's supporting it right now to where the volume is. And again, this isn't some history from 2 years ago. This is price history from 2 weeks ago, okay? This is price action from 2 weeks ago. Even if it did, by some miracle, get above this death zone, because you get a little pump right here. You know what that pump equated to? That pump equated to a top, okay? The only way Bitcoin gets through this death zone is pure whale pump. There's nothing else that's going to get it through here. So what most likely is going to happen is, like I said, the EMAs are going to push you up. The price is going to float up. You're going to hit the 233. If the 233 just doesn't flat reject you, and then price starts to do this, and go sideways, maybe test it again and start falling down. If the 233 just doesn't do that, you're not going to have the volume to hold the price in here. You're going to have a market reversal, okay? Now, on top of that, when you consider the fact that we just went through a liquidation of what, guys? Shorts. Where did we liquidate the shorts? Down here, we liquidated the shorts, right? On the big whale candle that got all of us, including me, because we had an obvious double top form and they pumped it, right? I've never seen that before where they pumped it. I believe this went, one of our group members told us, it was 1,800 points in like 18 minutes or something crazy. When you combine all the candles, it was 2,400 points over a period of a couple candles. It was absolutely insane, okay? I put that in one of my other videos. But you have, because of the psychology of the whales and the way the manipulated crypto space works, because if you guys think you're trading in a legit clean market, you're not. It's not regulated. And trust me, in the regulated market, that's where I come from, plenty of corruption there too. Like I said in a previous video, check out GameStop, check out AMC. These markets are manipulated. You have 50% of Bitcoin in all circulation owned by whales and financial institutions. They liquidated everybody down here. The next move, where there is literally no volume, the next move is to crash Bitcoin down. Okay, you're coming back down again. Now this move right here, like I said, this took 6 days to go 12,500 points. So everybody's saying, when is it going to happen? Is it going to happen overnight? Oh, you said it would happen 2 days ago. This takes time to move a market down. The first step is watching the price get rejected. At some point, either the 233 or in the Bitcoin death zone, the price is going to start to roll and it's going to start to fall. It could fall fast. It could leg down. As we all know and painfully have watched many times, it can be a very boring, long process to watch. But it will go down because there's nothing to support a price move up other than a pure whale pump. But a pure whale pump will just look like a peak and then fall back down, because there's nothing to support it. Guys, you cannot get to Bitcoin being 100K in this market or 200K, no matter how many videos that people release on it. You can't get there with volume like this. Look how the volume, look at the 41K level volume. How are you going to support the price there? Look at that. That's ridiculous. It's non-existent because we've been in this bear market since May 12th. Okay, the volume does not exist to get the price there anymore. We're in a bear market that is contracting. We always talk about range trading. Well, we are range trading, and the range is getting smaller, okay? Because the 200 MA, last time we fought it, was at the 41.5 level, and we're fighting it now at the 36 level. That's 5,000 points off Bitcoin, and we're fighting the same level again. The market, the range is getting smaller for Bitcoin. And the whales know this. So this move that they're doing here at this 37.7 level to 38.7 level, this was back in May, because everybody here remembers that. This was the move that was always happening between 39 and 41K. You get to 39, 41K, every weekend it crashed. Literally every single week in May, we had a crash from the same levels down to close to the same levels. 30K, 31K, 32.9, over and over and over again. Guys, trading is patterns. That's why I call it pattern trading. You have to be able to spot the pattern. This is the new pattern. This is the dead zone for Bitcoin. There is no volume. Price will not get into here. If it does, it's coming right back out. I don't see a pump getting through this. And guys, remember, you do not have to beat the whales to make money. Harpoon them, let them pull you along for the ride, and pick up the money on the way. Good luck, guys.